We're now on day number 41 of the $1,000 account challenge, and today we are up $238 in the account, or 7.76% of the total portfolio balance. Now, if you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far I can grow this account. Straight off the day trade watch list, we had Amazon as a long idea above $169. Here is the chart for Amazon. It was a gap up this morning on a positive news catalyst. So moving to the 1 minute time frame, shortly after the open, we get the break of $169 on the very first candle. Run all the way up to $170 and then the pullback to 169. Now, understanding that this is a stock that is moving on a positive news catalyst, I jumped in because I did not want to miss the move. So the very first entry possible after this ran up to the high of day that we were offered close to 169, I took it. I took that dip entry and that paid off for me. We get the rally right back up to the high of day, and that's a 20% gain right off the rip. 20% gain on Amazon right off the rip. Now, in order to not miss the second move, the very next dip entry offered to 169, same area, I took that entry as well, thinking, you know what, maybe this runs back up to high of day or potentially through the high of day. Unfortunately, we don't get quite that big of a move. We do get a move back up, but, not enough for me to say that I wanted to take profits on it. We're up about 15% on this trade. And I held through because I was looking for more. I was already green on the day from the previous trade. I was looking for more. I wanted to get at least 20% or at least a high of day move. Again, we didn't get that, so I closed it out over here for break even. So let me walk you through just the risk to reward on these two trades, all right? On the first trade, we are risking down to $169. We are looking for the price target of high of day or more. So our reward looks like this. Our amount of risk looks like this. Very low amount of risk compared to the amount of reward. The same is true for the very next trade, and it was taken almost in the same exact spot. So again, amount of reward very large compared to the amount of risk that was assumed. Now, I didn't take the profits because, like I said, I was looking for that high of day move, but we could have taken profits on this. And if you're that trader that has not been profitable yet, or you're not profitable on the year, or you're not profitable ever, you should be taking profits when they are offered. Anything over 10% is pretty good. Now, me holding this and closing it out at break even, it's a washout trade, but we get a third dip down to the $169 level. And I don't take the initial entry here because I wanted to see if this was going to bounce first. So us getting two green candles there was kind of my bounce confirmation. We get a red candle down, and then this next candle starts to print green. And I'm like, okay, let's go ahead and take this long because I don't want to miss this move. So we have an even better risk to reward ratio here. So the risk down to 169, potential reward up to the high of day. Now look at this amount of potential reward versus this amount of potential risk. I saw some of you not take this trade because you're like, Gates, it's making lower highs on the chart here. I just don't trust it moving. You're never going to make any money if you're not okay with assuming risk. Every single trade that we take, that you take, you have to assume risk on. If you're not okay with the risk amount, then you're never going to be able to profit because you're not going to be in a position to profit. So the risk that I was taking on by taking this entry here was well worth the amount of potential reward. And we get the consolidation and the pop higher. Now, on this trade, we are offered 20%, right? The contracts from where I entered all the way up to this mark here, we are up 20% on those contracts. But I made the decision to add to this position, and here's why. We are getting a hold of the trigger level. That's confirmation number one. We are getting a break of the downtrend trend line. That's going to be confirmation number two. It's something that is moving on a positive news catalyst. That's potentially confirmation number three. So I added the position here to up my cost basis, not lower it like I would normally do, just because I wanted to take more size on. When I took this entry, it was smaller size. So not only was it smaller size, but a smaller amount of risk. When I take this entry, I'm only adding more size onto the trade. We are up 10% here at the at this recent peak. I did not take the profits there because I was looking for that high of day move. So again, if you're following me on these trades and you're not yet profitable on the year, or you've never been profitable, or you're trying to grow your account, you need to be taking your profits, right? When this is up 10%, boom, take it. I don't take my profits though. I hold through all of this consolidation. We do get the rally back up to give us that 10% mark again. This time I went ahead and took the profits because I noticed that this was starting to chop and form a range. Then I went ahead and set my stop loss at break even for the remainder of the position, and I get closed out at break even. So the 3 trades that I took here, Amazon, 20% gain initially. Offered 15% on the next trade, didn't take it, I washed out at break even. Offered 20% on the next trade, I didn't take it, I added to the position and instead took 10% profit on partial and then washed out at break even for the remainder. Now you might ask, well, Gates, why would you not take an entry over here? We're getting another dip down to 169. You're saying that this is moving off of news catalyst. You're taking all of these entries to the left. Why would you not take that entry to the right? Well, because we're getting a break of the downtrend trend line here. We're entering into a phase of consolidation, and instead of the stock pressing out of this range into the high of day or testing the high of day, it breaks down from that range. That to me, on this candle over here, when it starts creating those lower lows, is telling me that we are on the backside of this trend, and any entry taken over here is not going to work. So we avoided getting caught up in a losing trade by knowing that this is breaking down from this range here. And in fact, what we probably should have done was flip this and gone short on a break of 169 rather than continue to watch it fall. However, hindsight is 2020. We had already made our money on the 3 trades prior, and we were good to go with that. Now, I took one other trade in this account today, and that was on Meta. It was a really quick trade. It was a short idea below $466. Again, just straight off the day trade watch list. Meta short below 466. We do get the break of 466 over here. I'm not into this trade at this time. I'm waiting for the rally up retest. We don't get it, but we do eventually get it over here. So we get the rally up retest 466 there. I take the entry short, and I just took my profits here at 10% when it was offered because it was a flash move that happened very quickly. If you did take this entry with me, you should have been okay on this trade. It never reclaimed 466, does reject again, and then gives you that drop lower over here, which those contracts were back up 10% at that time. And I did mention this in the chat. If you're still in Meta, you're still profitable here. So Amazon, 3 trades, all winning trades, though I didn't take my profits on all of them. And then Meta, winning trade. If you didn't take your profits where I did, you were still offered profits over here, and it never did reclaim $466. So there's no reason to panic out of this trade and close it. That's it. That's all that I have for you today. I hope that this video has helped you out. Press that like button for me if it has, and consider subscribing to the YouTube channel if you haven't done so already. It's just the best way to support me in this type of work that I do, and it's free. I will see you tomorrow when we continue the $1,000 account challenge, and thank you for watching.